I will be with you guys in just a moment. Just adjusting this string. How are you guys doing? How was everyone's weekend? How's everyone's credit score doing? Put it in the chat. I want to see where your credit scores are at. Let's go, squad. All right, all right. All right, let's go ahead and get started. All right, start off with this first video. It's gonna be every credit card denied me for a year straight. I'm very curious to see why. Okay.
Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we're going to talk about what it's like to get denied for a year straight on all new credit cards, especially as someone who loves to make money off of credit cards, is easy money, and is on TV talking about credit cards on a weekly basis. Twice a week over here, actually. You should get subscribed and you can see it all. But anyways, we'll break down how this happened, why it happened, what I feel about it, and then, what I'm going to try to do going forward to sort of get more approvals going. So, of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now, of course, if you're new here, there's two channels. This one has primarily become the credit card and news show. We do the news every Sunday, and then over on the second channel, run on the bank. And then profitablecontent.com, we do bank promotions. And so, last year I went pretty hard on 2024. I got like, I don't know, 20 or something new cards all over the place. Made about $9,000 in credit card offers and points. And that's always my goal, as you know, to make a minimum of $5,000 from credit cards, 10 from bank promotions, and 10 from referrals. But specifically for credit cards, you can only do so many before you start to get denied.
If you're looking for a business loan, an SBA loan is one of your best options. Why is that? To start with, the Small Business Administration, or SBA,
and the reason being is you simply are identified as a risky customer or a unprofitable customer, in which case I would say yes to both. And that's so much the risk, but there is risk that, there's
Oh well, hopefully you guys were able to hear me. I'll repeat myself anyway. So essentially, okay, give me a moment. I'm trying to stabilize one of my other screens. Okay, but anyway, what I was saying is, so when it comes to having so many credit cards today, I had to deny somebody because they had like how many? They had like 13 credit cards, and I was just like, how much more do you need? Like, we can decline you for it. It is called excessive obligation, not excessive consumer trade line is essentially what it's called. So yeah, so I was like, so you can get denied just for having too many credit cards, and hopefully as we like dive in more into the to the video that we're able to find out more. But let's go ahead and hop on for the ride, though. At least, let me see. I'm trying to adjust. Anyway, let's continue.
There's no context behind credit card applications because they don't know why would a normal person need that much credit this fast, right? And then if they can see how much credit you're using, and if you're not using it, well, then you must be unprofitable. And so you can see how after a quick run of 15, 20 cards, the denials start to pile up. And so I'll put it on screen, but I got approved for like basically anything I could because I was just trying to make as much money as possible. I did things like the Venmo card, the Rocket Mortgage card, Huntington Bank had a card. You name it. If it offered an intro offer, I'll sign up for it. I have no shame. I'm pretty much a degenerate. So after a while, you can see that these start to pile up. And it's around my probably summertime of 2024. I definitely started to get denied about a lot of things. Discover was like my last approval, and that was like in June. I want to say 2024. Like Discover, I'm told will pretty much take anybody. That's why I applied for it. But Bank of America Premium Elite card, the Citi Strata Premier, the Wells Fargo Journey card, Those are a few that come to mind. I'm sure there are others in there. Or the Apple Card, believe it or not, because I thought Goldman Sachs was in trouble they got him in trouble because they had to approve everybody. Apparently, not the case. So the point being is that one of those things we can kind of take for granted is approvals, right? And there's a whole other side up there who like getting approved for a credit card is not necessarily a guaranteed thing. So what's it like to live like the other half? Now, we're not necessarily trying to make fun of them. There's a lot of people working on their credit and everything, and that's great. It's admirable. You should do it and you'll get there one day, but you just got to understand once you're fairly established with a credit file, approvals for credit cards are pretty much a layup until you end up doing what we do and being degenerates. And because I've always said credit cards are kind of a joke of a product because they're taking stated income. And anytime you're taking stated income, it's not a serious loan. Like it's just that you can get into trouble with it. It's a real financial product to be sure, but it's just stated income. It's kind of a joke, but again, they have to draw the line somewhere, right?
Well, when it comes, even though it's taking stated income, it's not taking it at 100% face value. Like they partner with a financial institution called Plaid, which I don't know if you guys have seen it before, but essentially where it will let you sign into your bank account and it'll verify it that way. So, and then they have access to different type of information. So Plaid will give them access to your bank account where essentially they're able to see what your habits are, your financial habits. So they'll look through your checking account and be able to determine it that way. Also they're gonna have access to a soft pull of your credit, which ends up being essentially the soft pull. It at least shows what your balances are of what you owe. So if you are owing a lot, then it's going to take that stuff into consideration. So this is one of the systems that I was telling you about. So this is Plaid, just in case for the people that are not familiar with it. So we have Plaid here where essentially, again, financial institutions will use them for it. Like these are the lenders or the financial institutions that work with them. Let's wait for it to pop back up. But essentially for faster and easier account funding, pay by bank, loan repayment. So they work with Robinhood, Chime, Rocket, which also they have a division in the mortgage department. SoFi Bank. So they work with all these lenders to go ahead and do that. And also they're going to do the prominent ones, the ones that a lot of people know. Fudge off. So essentially that's it essentially what Plaid is when it comes to these. So yeah, so like even though they're taking it at stated, they have access to all this information, which again you agree to when you go and hit apply. So it's like they'll run a system called LexisNexis where essentially it can make sure that there's no fraud going on. So it'll look at other people that have used your social, your date of birth, and cross examine with what you put on the loan application. It'll look at ratio. So we're talking about debt to income ratio. We're looking at credit utilization. We're looking at when your most recent card was open. So all of that can be pulled through a soft pull. So, that's something to be aware of when you're doing this. But yeah, let's go and continue. All right, let's see.
Here we are. So, the few things that come to mind is number one, just the change of, as I just said, when you submit an application, I don't really care. That's why a lot of folks have done the watch me apply videos, and good for them. They must be popular. I've personally never thought it was interesting because for the longest time, you'd submit it, and like, why would you not get approved, right? You get into like the 700s, you're pretty much good. But now that's not the case. Pressing the submit button is no longer just a layup anymore, because you're like, I don't really know if I'm going to get approved or not. Now I would say you have a much better understanding, given how easy all the apps show all your credit cards. I tend to use my Rocket Money app, not a sponsor thing. I used to work there, and that it does link pretty well to like my three mortgages with Rocket Mortgage, and they have a section that shows you your inquiries, and so I'm sure I'll put it up at one point here or there. But anyhow, now that you can tell the count, I guess it's not as surprising, but even still, not every Chase was known for having 524, 5 new applications in the last 24 months was an instant denial, and then there was that spot where they kind of removed co-branded cards because the co-branded partners complained. Bank of America's always had 3 and 12 or 7 and 12, but after that, for the most part, you could get it. But it seems Wells Fargo and Citi have joined in as well. So that was the first change. It's just not a layup anymore when you submit them. The others is more so just how it ends up being.
That's when you're gonna start seeing your you'll have someone manually review it. Not when you apply through these companies like a Credit One, the ones that do a lot of bad credit. Like, let's take a look here. Let's see here. Bad credit card instant approval. Okay. Trying to find one. Wallet Hub. Yep, let's just go to this one. This one will be a lot more easier to show you. Because again, I want you guys to have a visual representation. So when I'm showing you these, let's see, unsecured. Oh, one main. Look at that, one main. Fair. Okay, so let's take a look at this one. All right, so these are a couple of the of people that have bad credit, and you can have, so the ones that have like a credit score fair and bad, that will tell you, normally people that are under 670 are considered fair. Bad is anything I think under 620, or under 600, one of those two. But essentially, these people, like, they have an algorithm. So in not just anybody. So you got Montgomery credit account. So this is for people that have fair, limited, and bad credit. So this is an algorithm. So this company uses an algorithm to be able to approve you as opposed to a bank, right? Like Discover, which is down with Capital One, Open Sky. They're another one. Those are credit cards that work with people with bad credit. Let's see. That's secured. Here it is overall. But essentially, you guys get the gist. Like Bank of America, they have an actual underwriter that actually looks at your application. So essentially, there's a lot of things that go into this when it comes um, to giving you a credit card. So that's why it's based off what he said about stated income. That was kind of a long way around it, but hopefully that makes sense. If it doesn't, definitely put it in the queue, and I can go ahead and clear that up for you a little bit more. All right.
Being restrictive, and by that I mean obviously the biggest one is in earnings, right? It's fairly tough to get to $5,000 just spending, right? Now this year's a little bit different because we had basically almost a year of Smartly, of US Bank Smartly card at the 4% tier, which I was at. I earned about $2,000 on that card in cash back. It will be a little bit more by the time it's all said and done. And you're watching this later, but it's late August right now, so I'll do a little bit more. It's done September 15th for me in its current form, so that's kind of an outlier though. But if I didn't have Smartly, it would have been really hard to get to the $5,000 mark, because that's 2,000 and some change alone for one card just through spending.
Why is Airbnb paying?
If you really want to hit $5,000 a year in cards, you're gonna need some intro offers. So that's one thing. It's very limiting. It's still doable, but it's very limiting. The other thing is like the restrictions and limiting of being able to miss out on opportunity cost, right? There's been some new offers. The cards themselves, I think, are pretty bad. Being the Citi Strata Elite, the Strata card, of course, the white one. Chase revamped the Sapphire Reserve, and also a business Sapphire as well. Again, all terrible cards in my opinion, but their intro offers nonetheless, but you can't get any of them, so you're really missing out. And again, those launch intro offers are usually the high point. Now, yes, we normally see them again. We've seen the Sapphire Preferred, 80 to 100 once a year in the spring for the last few years now, so they're not gone forever by any means, but you lose out on being able to immediately take advantage of these things. Another one like Bank of America had, the customized cash card, the red one, it's giving like 6% cash back, for it's the $200 plus, like that rotating category that you choose. Instead of doing at the base, it's 3%, it's giving base 6% up to 2,500. That would have been a really good one to take advantage of, but I know I'm much over Bank of America's 7 and 12 rule as an existing customer. So you just kind of miss out on all these offers, which is pretty tough. The other one,
All right, let's look up this Bank of America 712 rule. This is interesting. I've never heard of this. So let's take a look here. So All right. Okay, so Bank of America 712 and 312 rule. A new report indicates Bank of America will only approve new credit card applications who have less than 7 new cards open in the last 12 months or less than 3 new cards open in the past 12 months for someone who does not have a deposit account with the bank. Okay. The past year, okay, da 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 da. Application for lack of banking relationship. The indication has been it's easier to get a credit card approvals if you have a deposit account with them, such as okay. So the relationship, okay. It's never been clear exact criteria. Only thing we know for certain is that the 234 rule, the rule references the limits of how many Bank of America cards you can get over a time frame, two in any 2 month span, 2 to 3 cards in a 12 month, and a fourth card in 24. No clear guidance has been known on the number of overall cards. Okay, so according to someone in the know, it looks like the tolerated number amount is as follow. Those who have an account with Bank of America, like it listed up there, 6 new cards in the last 12 months is tolerable. 7 new cards in the last 12 months, your application will be denied. For everyone else, 2 new cards in the last 12 months is tolerated if for everyone else 2 new in the last 12. If you have a third in the past 12, it will be declined. If you have 250 plus in the bank, you may bypass the 712. God damn. Okay, so that's essentially what the 712 rule is. That is definitely very interesting. The good thing is, I guess it depends. If you're here to want to like start building your credit, it doesn't matter honestly how many. Well, I guess it does matter how many times you will apply. But what I mean is, you getting these points, getting these cards with it. If you're like Bank of America, that's one thing. But if you're just trying to get the card, then there's so many places that will give you a credit card. But I've never ran into this rule with myself. Even at a bank of where I worked at, they um, they're okay with having multiple credit cards if they offered them. But obviously, they're not gonna go ahead and offer as much as what they can offer on the credit cards, depending on where your credit is, your credit limits you've had before, your credit utilization, how your credit is overall positive. Um, so yeah, so I was like, I never ran into that. Like even at the credit union where I'm at, like they have multiple credit cards, one for points, one's just to have. Like you can get like 2 to 3 credit cards, but if your points that have a high credit limit, might as well just go with the credit union and just start building that up, and maybe open up another credit card here and there. Just because sometimes the financial institution wants you to build a relationship, like Bank of America is. Like they want you to have a checking account, a savings account, maybe a CD. Maybe you have a maybe you have a other banking products that they have. So maybe like a business bank account and things of those nature. Maybe you have your wife and your kids. You guys get it. It's just having a lot of the services, using a lot of the services that they offer. But this is only strictly to you opening an account. So I'm not talking about like you doing ACH payments or having like doing like a wire transfer. Like that stuff doesn't matter. Like, do you have direct deposit going in? Are you using the debit card? So it's like you have all that stuff, and yeah, that is kind of a food for thought. So remember, go ahead and put your credit questions below. I will be there to answer your questions once they're there. All right, let's go ahead and continue. All right, let's see. Let's see if we want to pick up from a different part of the video. So these are new cards, not really offering anything tools options. Okay, we'll do a little tools. We'll do a little tools. Let's see what he got to say.
Is it's like I would describe it as sometimes trying to do a project around your house or fix something and not having the right tool, the right thing, so you end up trying to like rig something together to like make it work. So, like I don't really want to go buy, so I guess you got to use the 2% Smartly card, and I can't yet try to convert it to a Cash Plus card. I don't know if they'll let me or not, because I still need a 2% card. So in that regard, it's limiting the options of tools that we have available.
Imagine being able to build an app with your name on it, just by thinking about it.
Okay. Alright, let's go ahead and move on to another video. This one's definitely interesting. I was able to give some information based off the video, but okay.